Imagine waking up on your 40th birthday, walking into your living room and realizing that your entire financial destiny has already been decided. You look at your bank account, your mortgage, your investments, and the crushing realization hits you. The person who decided whether you would be free or whether you would be trapped forever wasn't a corrupt politician, a greedy boss, or a broken economic system. It was a 23-year-old version of yourself staring back at you from an old photograph. The truth is terrifying. Your 20s are not a playground for rehearsal. They are the high-stakes foundation where your wealthy 40-year-old self is either built or completely destroyed. Most young adults buy into the ultimate lie of modern consumerism, the illusion that youth is for spending and your 30s and 40s are for saving. They tell themselves that they will start investing tomorrow, next month, or when they finally land that big promotion. But by the time they reach 40, they realize the most brutal law of wealth accumulation. Compound interest does not care about your excuses, it only cares about your time. And once that time is gone, no amount of hard work can ever buy it back. Every single day in your 20s, you are standing at a massive psychological crossroads. Every dollar you spend on temporary validation, whether it's a luxury car lease, a premium coffee ritual, or a designer jacket to impress people you do not even like, is not just a dollar gone. It's a piece of your future freedom traded away forever. Morgan Housel, the brilliant author of The Psychology of Money, noted that doing well with money has little to do with how smart you are and a lot to do with how you behave. Yet society trains 20-somethings to behave like hyper-consumers, drowning in subscription services, credit card debts, and instant gratification. We see influencers flaunting rented sports cars, and we mistake debt for wealth. This creates a deep psychological trap where we become rich in appearance but completely bankrupt in freedom. If you want to break out of this matrix and guarantee absolute wealth by the time you hit your 40s, you cannot afford to follow the standard script. You need to aggressively deploy your capital into 7 smart, specific investments before the decade ends. Before we unpack these game-changing assets, hit that subscribe button right now because your future self is relying on you to master the rules of wealth today.
Let us build an emotional connection to what is truly at stake here. Look around your current environment, the tiny apartment, the stressful commutes, the underlying anxiety of checking your balance before tapping your card. Now project yourself 20 years into the future. Do you want to be the 40-year-old who is still trading hours for dollars, terrified of an unexpected medical bill? Or do you want to be the person who walks into a room knowing that every single asset they own is printing money while they sleep? Warren Buffett famously said that if you don't find a way to make money while you sleep, you will work until you die. In your 20s, you possess the most powerful financial superpower that even Buffett himself cannot buy back with all his billions: raw, unadulterated time. When you are young, your income potential combined with compounding creates an explosive financial weapon. But to activate it, you must understand the very first smart investment: asymmetric skill acquisition. The first and critical asset you must invest in during your 20s is your personal earning capacity. In finance, an asymmetric bet is one where the downside is strictly capped, but the upside is literally infinite. When you spend $500 on a high-ticket skill course, a specialized certification, or public speaking coaching, your maximum loss is $500 and a few weekends of your life. But the upside? It can elevate your baseline salary from $40,000 a year to over $150,000 a year, compounding every single year across a 40-year career. Most people stop learning the moment they receive their college diploma, entering the workforce with stagnant skills and expecting dynamic raises. They fall victim to inflation, watching their purchasing power erode while their wages remain frozen. By intentionally investing in skills like advanced data analysis, high-ticket sales, systems engineering, or digital architecture, you turn yourself into a high-yield asset. You become the scarce commodity that companies and markets desperately compete to pay for.
The second smart investment is the immediate activation of the automated compounding machine through index funds and equities. Let us look at the raw, undeniable math, because numbers do not have emotions and they do not lie. Imagine two individuals, Marcus and David. Marcus starts at age 20, investing exactly $300 a month into a low-cost S&P 500 index fund, yielding an average annual return of 10%. They do this for just 10 years, completely stopping at age 30 and never adding another single penny. Total invested, $36,000. David waits until age 30 to start, feeling that their 20s were meant for living life. They invest the exact same $300 a month with the exact same 10% return, but they do it continuously for 30 straight years until they turn 60. Total invested, $108,000, 3 times more than Marcus. Who ends up wealthier? When they both reach age 60, David has roughly $680,000, but Marcus, who started 10 years earlier and never invested a single dollar after turning 30, sits on a staggering fortune of over $1.2 million. Read that again. Marcus invested a third of the money, stopped completely, and ended up with nearly double the wealth, simply because they gave their money 10 extra years to compound in their 20s. This is why waiting until your 30s to take investing seriously is nothing short of financial suicide. By setting up an automatic transfer to your brokerage account every single time you get paid, you remove human emotion from the equation. You dollar-cost average through market crashes, recessions, and bull runs, turning market volatility into your greatest ally. The third smart investment is building your absolute psychological fortress, the Strategic Opportunity Fund. Most financial gurus call this an emergency fund, telling you to park 3 to 6 months of expenses in a basic savings account just in case your car breaks down or your roof leaks. But let us look at this through a deeper psychological perspective. An emergency fund is defensive. It is built on fear. An opportunity fund is offensive. It is built on power. When you have $20,000 sitting securely in a high-yield savings account in your 20s, your relationship with the world completely changes. You no longer operate from a place of desperation. You don't have to tolerate a toxic boss who demeans you. You don't have to accept a dead-end job just to pay rent, and you don't have to panic if the economy takes a sudden downturn. Charlie Munger always emphasized the importance of having cash ready to deploy when massive opportunities present themselves. If a market crash occurs and stocks go on a 50% discount, or if a brilliant business opportunity lands on your desk, the person with zero savings is trapped in survival mode. The person with an opportunity fund steps up and buys the distressed assets, catapulting their net worth overnight. The fourth smart investment is the cultivation of a high-leverage professional network. There's an old saying that your network is your net worth, but in your 20s, people often misinterpret this by collecting meaningless business cards or spamming people on LinkedIn. True networking is not about what you can get, it's about what you can provide. When you're young, you have an abundance of energy, time, and digital literacy. By investing your time to solve problems for high-performing individuals, mentors, and industry leaders without demanding immediate compensation, you build a massive reservoir of social capital. Robert Kiyosaki often talks about how the rich build networks while everyone else looks for work. A single introduction from a high-value mentor can bypass a decade of corporate ladder climbing. The rooms you get into in your 20s determine the opportunities, the board seats, and the equity deals that will flood your life in your 40s. The fifth smart investment is buying back your future health through proactive physical and mental wellness. It sounds incredibly cliché in a finance video, but health is the ultimate leverage.
What is the point of grinding 14 hours a day, sacrificing your sleep, destroying your nervous system with stress, and accumulating $5 million by age 40 if you have to spend all that wealth on medical bills, trying to repair a broken body? Your body is the only vehicle you are given to navigate this economic game. By investing in premium nutrition, consistent physical resistance training, quality sleep, and mental therapy in your 20s, you ensure that your cognitive function remains razor-sharp when your career demands peak performance. Energy is a massive competitive advantage. While your peers are burning out, suffering from chronic fatigue, and crashing in their mid-30s, your disciplined health investments keep you operating at an elite level, allowing you to outwork, outthink, and outlast the competition. The sixth smart investment is creating a digital sweat equity asset. We live in an unprecedented era where the cost of leverage has dropped to zero. In the past, if you wanted to build a scalable business, you needed massive capital, physical factories, and a massive workforce. Today, as media tech expert Naval Ravikant points out, the modern forms of leverage are code and media. They are permissionless. You do not need anyone's permission to start a YouTube channel, write a digital newsletter, build a software product, or record a podcast. By dedicating just 5 to 10 hours a week in your 20s to building an online brand or a digital asset, you are creating an intellectual property factory. Even if your first 3 attempts fail, the digital infrastructure you build forces you to master marketing, copywriting, video editing, and audience psychology. When you hit your 40s, that digital presence can easily transform into a multi-million-dollar cash-flowing media engine, completely independent of a traditional corporate job.
The seventh smart investment is mastering the deeply complex psychology of micro-deprivation. This is the ultimate mental shift. Micro-deprivation is the conscious choice to say no to immediate, fleeting pleasures today so you can say an absolute, unshakable yes to monumental freedom tomorrow. It means driving the reliable, used sedan even when your salary allows you to finance a flashy new European car. It means living with roommates for a few extra years to keep your fixed housing costs radically low. It means understanding that true luxury is not a brand logo stamped on a leather bag. True luxury is the autonomy to wake up on a Tuesday morning and decide exactly how you want to spend your 24 hours. Every time you practice micro-deprivation, you are actively defeating the beast of lifestyle inflation, the deadly financial disease where your expenses rise at the exact same rate as your income, leaving you perpetually trapped on the corporate treadmill. Let us bring this journey to a powerful, undeniable conclusion. The clock is ticking right now, second by second, completely indifferent to your dreams or your anxieties. Every day that passes is a day where the leverage of your youth becomes slightly less potent. You cannot alter the past, and you cannot predict every twist and turn of the global macroeconomy, but you hold absolute, radical responsibility over what you choose to do with the next dollar that hits your bank account and the next hour that enters your life. Do not let your 20s be a fuzzy blur of cheap thrills, financial avoidance, and wasted potential. Choose today to build a legacy that your 40-year-old self will look back on with tears of absolute gratitude. Start that automated investment account today. Buy that skill development book tonight. Cut out the toxic spending habits tomorrow. Take control of your financial destiny right now, because the future you are building is waiting, and it is going to be spectacular. Leave a comment below telling me the very first investment you are committing to today, and let us build this wealth together.